Hello and welcome. You tune in to Market Fatafat with me, Ankita Saxena, and with me is, as always, is Snehi Shah. And the show where we get you all the buzzers in trade either on the back of news flow or on the back of technicals. But first up, let's take stock of how the market is shaping up. Snehi, we can feel the jitters on the market as well, the geopolitical tensions that are building. We managed to, so we had scaled down from 24,000 levels on the Nifty, but we have managed to scale those levels right now. We're seeing a recovery on Nifty, and Nifty Bank as well is seeing a recovery from the day's lows right now.
Absolutely. It's not only the benchmarks, it's also the broader markets that have recovered from the day's low. Hi there, good afternoon, and let's take a look at what the benchmarks are up to right now. For Nifty, we have crossed the 24,000 mark once again. At one point of the day, we were even struggling to hold on to the 23,900 mark. We were around those 23,850 levels, which means from the day's lowest point, it's a good uptick of 200 points. But nonetheless, we're very far away from the day's high and still on the spot basis, roughly 0.7% lower on the Nifty. Nifty Bank as well, a 1% cut still persists, but some recovery is what we've seen off lows for Nifty Bank as well, and we're sub the 55,000 mark on Nifty Bank. And a 1% cut persists over there as well. Sensex 2 in tandem with the Nifty, a 0.6% drop coming in. India VIX has spiked up further, a 6.5%, almost a 6% rise is what we're seeing on India VIX right now. Advanced decline ratio looks as negative as it did in the morning in the favor of the decline, so that has not changed all that much. But you have a certain group of stocks that have done very well in today's trade, and some of them are earnings candidates. Case in point being SBI Life, a steady move coming in, and it's a one-way up move coming in for SBI Life today. A 5% uptick coming in on SBI Life. Okay, that one has also gone slightly lower, and 4.5% uptick is what we are seeing on SBI Life right now. Mphasis, TCS, Tech, Mahindra. So it's really the IT pack that's shining in today's trade, and it's the only sector that's in the green right now. Nifty IT holding up pretty well. Names like Mphasis, earnings candidate, good set of numbers, 2.5% higher. Coforge, Persistent, Mphasis, TCS, these are, and Tech Mahindra as well. These are all the companies that are keeping Nifty IT afloat. On the flip side, you have FMCG, Auto, PSU, Metal, Pharma, Realty and Media. In that pecking order, these are your top losers when it comes to the sectoral moves. Axis Bank continues to bleed in today's trade on the back of weak outlook. Adani Enterprises, Adani Ports, Shriram Finance, Trent, Power Grid, these are the Nifty 50 names that are not doing all that well and causing pressure on the markets. Of course, you had a healthy handover coming in from Asia as well as US, but it's our own geopolitical tensions and increasing conflict with Pakistan that's weighing on our markets quite heavily in today's trade. On the back of that, a 0.7 of a cut is what we're seeing on the Nifty right now.
All right, so jitters of geopolitical tension with Pakistan is being felt in the market, but it is trying to recover from the day's lows for now. But let's move on and get started with the show. We are now joined by Vikas Jain, who's the head of research, Reliance Securities. And from our research team, we are joined by Ansh and Rabinder. Hi, good afternoon to all three of you. Thank you so much for joining us. Let's get started with all the stocks that are in focus today. First up is SBI Life. Of course, that's in news today on the back of its strong set of earnings that it has posted. That's trading up 5%. So SBI Life, in fact, we saw a consolidated net profit for the March quarter that zoomed 9.6%, on a year-on-year basis. It is tough to read the nerves of the market as the stock, surged for the company's total income for the quarter under review of, which fell for the year, while the profit rose, like I mentioned, slightly above, in the same quarter a year ago. From same quarter a year ago, the insurance total income for the March quarter, dipped 36% on a year-on-year basis. However, the company was able to rejoice that 13% growth is recorded in the renewal premium. On the other hand, the single premium of the company slid 42% on a year-on-year basis, dragged by the net premium income for the company by 5% for the quarter. SBI Life Insurance has also managed to cut down its expenses related to the benefits and accruality, of liability during the fourth quarter of FY25. The 12% growth in the individual rated premium of the company for the financial year that ended was more than the industry growth of a 10.5%. Also, we had the management, Amit Jingan, who's the managing director and CEO of SBI Life Insurance. He said that the annual APE growth is at 9% on a year-on-year basis, and the individual APE growth is at 13% on a year-on-year basis, which is consistent, likely to remain consistent throughout the year. On the back of that, SBI Life is in focus today.
Well, absolutely. SBI Life in focus. Good set of numbers. Stock is soaring away amid a largely weak market. But like Ankita mentioned, let's go across and listen into some more commentary coming in from the MD and CEO Amit Jingan and what he had to say on the outlook going ahead.
the company has a ULIP heavy portfolio, which is like not affected much by the surrender value norms. Again, previously also our surrender value was much higher than what has been the industry practice. So overall impact on the surrender of the surrender value on business is not much. As far as experience is concerned, we will have to wait and see that how this surrender value after the first year premium pans out. There are a lot of opportunities available in the banca, and I am sure that this banca channel being the least cost option for the distribution will continue to play a major role in the growth of insurance industry.
Okay, well, let's move on from that. And Vikas, coming to you, Indigo is a stock that you've picked out for us. Very recently, the stock was sitting pretty at its life high as well. Tell us what kind of runway are you seeing for the growth, if I should ask you, and what are the levels that you're spotting?
If you look at the stock near the top near to those 56, 5700 levels, and today it is been in pressure with 4.5%. We believe some more amount of profitability cannot be ruled out at current levels. And the stock could face the previous stop near to those 5050 to 5100. So another 150 to 200 points of downtick would be expected into the name, which could give a good buy point level near to 5050 to 5100 levels.
Okay, those are the levels to watch out for on InterGlobe Aviation. Let's move on and talk about an earnings candidate. This stock is largely hit in today's trading session. That's Axis Bank. Let's take a look at what the numbers and the earnings fine print been like. Net interest income has come in at 13,810 crores, which is up 5.5% on a year-on-year basis. Operating income also up 2% higher. However, PAT has seen a slight bit of a hit, a 0.2% cut coming in on a year-on-year basis. Now, overall, the performance is largely in line in terms of the net interest income and PPOP. So then you must be wondering, why is the stock down? Now, some reasons for this. There's been a steady quarter, although it's been with expectations. Remember, peer banks have done much better. The likes of HDFC, ICICI Bank, all of them have done much better in terms of growth, credit cost improvisation, and they also offer better visibility for growth in FY26. There's also been lower loan book growth for Axis Bank. Although the management does not provide any guidance, the street is still unclear whether loan growth will be in line with system growth, and credit cost elevation has been guided by the management in FY26. So that's another headwind coming in for the company heading into the next financial year, which is the current financial year, FY26. So on the back of that, some weakness seen in Axis Bank, a 4% cut coming in as we speak.
Right, with that, it's time for us to slip in a short break. Don't go anywhere. We'll be right back after the break with some more puzzles.
Hi there, welcome back to Market Fatafat. Let's keep it going with all the stocks that are abuzz in today's trade. And Ravinder, coming to you, you've picked out an earnings candidate, SBI Card. Stock is under deep pressure today. Tell us what has led to this, and what does the earnings fine print look like?
Well, as SBI Card and payment is in focus, our company has announced its Q4 number, and the company's interest income saw an uptick of almost 13% year-on-year basis, and I also saw a good uptick of almost 14 to 15% year-on-year basis. But PAT has fallen down to almost 20% from 662 crore to 534 crore, and the company's credit cost also saw a decline of 9%, and new account opening also saw a 6% decline year-on-year basis. And management has highlighted few macro concerns, where they say that the macro environment continue to witness headwinds leading to a stress in unsecured lending system, and interest rate have been declining, which will have an impact on yields going forward. And there are some brokerage note coming in where Morgan Stanley has given a equal weight rating with target price of rupees 775, and Goldman Sachs has given a buy call with target price of rupees 1006. So inline set of Q4 number of SBI Card and a little weak management commentary lead to a decline of almost 6% in stocks.
Okay, so that's the reason why SBI Card is in deep pressure today, a 6% cut coming in on that stock. But because coming to you, SBI is the stock that you've picked out for us. Tell us what's the outlook on the charts, because any chart you pull up, right, 1 year, 3 months, 6 months, the stock has not done all that much. YTD also absolutely flat moves coming in. Do you believe that after this kind of stability that the stock has seen, do you believe that there is now a chance for a run-up on the stock, and what are the levels that you're spotting?
Looking at SBI specifically, the stock has held its 100-week average and witnessing strong amount of pullback. Now it's trading at 2-month high, and we believe the results are yet to be out, which is to be expected next week. So the rub-off effect would be on the higher side. So the weakness current opportunity of 1.5-2% decline in today's broader market move gives a good opportunity. We believe on the higher side, the stock can move higher further near to 835, 840, which is the November month high, and then we could see some amount of strong amount of up move. Except for also the PSU banking index has retested its 200-day average and witnessing strong amount of pullback. So PSU banking index should also relate to the SBI strong uptrend.
That's the reason why, that's the rather the levels that you can spot on SBI. But moving on, Ansh, you picked out Tech Mahindra, yet another earnings candidate. Tell us what the earnings fine print is.
Well, Tech Mahindra has reported mixed set of quarter 4 numbers. Revenue and margin were in line with the expectation, but profit that was significantly higher than the expectations. Dollar revenue stood at $1,549 million, a decline of 1.1%, but in rupee term it was up by 0.7%. Now, if we talk about profit, then that gave a good jump of more than 18% to 1,167 crore. Also, EBIT was up by around 2% sequentially, whereas margin improved from 10.2% to 10.3%. If we talk about operational highlights, then deal win improved from $745 million directly to $798 million. So overall steady state of number with good jump in profit. Also, if you see on chart, then the stock is trading with a gain of more than 1%, and from April lows it has given a 20% jump on upside. We also have a brokerage report from Centrum where they have given ad rating with a target price of 1,604, which is 10% above from its current market price.
Okay, that's the reason why Tech Mahindra is in focus. Very good set of numbers, rather decent set, but net profit has been a beat. That's the reason why even amid a largely choppy market, this stock is up 1%. But let's talk about ACC. That's the next stock in focus. Now remember, earnings came in post-market in the market hours yesterday, but the stock is in focus on the back of brokerage reaction today. Just to run you through what the numbers look like, revenue was up 12%, PAT has fallen roughly 2%. There was also an exceptional profit of 134 crores. EBITDA has come in at flat at 740 compared to 745 crores, and margins have seen a hit, 12.4% compared to 14% year on year. On the back of this, Nomura has come out with a reduced call on the stock. The target price is at 1,920 rupees per share. They believe that the EBITDA per ton is at 673 rupees, which is 4% below what the street was expecting. You also have an adverse reaction coming in from Axis Capital. They have downgraded the stock to a reduced rating. Target price at 2,050 rupees per share. That's the brokerage reaction on ACC. Remember, numbers came in market as yesterday, but on the back of a mixed set rather, or a weak set, and brokerage reaction, negative calls coming in, the stock is low by almost 6% as we speak. But while we are speaking about stocks that have not done all that well, L&T is something, Vikas, that you've picked out for us. Last 1 year or YTD basis, the stock has not done all that much. 6 months also a 1% cut coming in. So not much happening for this stock. What's the outlook going ahead?
L&T was one strong outperformer. The stock has witnessed good corrective action from the highs of around 4,000 odd levels. Now the stock is again back to the buyback price about what the company has initiated near to 3250 odd, which near to the last year. So we believe the stock is being paused. It is making a higher bottoms on the weekly charts and right for a strong amount of up move. So we believe with the infrastructure space putting in through, L&T remains in a sweet spot. On the higher side, on an immediate basis, we expect L&T to test higher near to 3450, 3500 levels. And if that is being surpassed, then we could see some amount of strong move near to 36,800, 3680.
So those are the levels to watch out for on L&T. Tabinder, let's keep it going with earnings. Macrotech Developers, numbers that came out post markets yesterday. Tell us what do the numbers look like? What is the booking? What is the pre-sale number looking like? Because stock is not doing all that bad. It's just a 0.6% cut given the way the market is trading right now. Tell us what those quarter 4 numbers look like.
Well, as Macrotech Developers has reported its Q4 number, and the revenue saw a uptick of 5% year-on-year basis, and adjusted EBITDA also saw a good uptick of almost 9% year-on-year basis from 1340 crore to 1460 crore. Margin also saw margin increase from 33.4% to 34.6% year-on-year basis, and if we talk about adjusted profit, then adjusted profit also saw a good uptick of almost 39% year-on-year basis, and the company's pre-sales stood at 4,810 crore, which was up by 14% year-on-year basis, but below the street estimate, and the collection saw an uptick of 26% year-on-year basis. So inline set of number of Macrotech Developers of Q4, but company's pre-sales was below the street estimate, and the stock is trading around flat level.
Okay, so those are the numbers coming in from Macrotech Developers, popularly known as LODA. Let's move on from that, because Dr. Reddy's is something that you've picked out for our viewers today. Tell us what the charts are shaping up to be like, because last 1 year or even on a year-to-date basis, the stock has seen a cut. Last 6 months itself, the stock is lower by 10%. Do you believe that we're at the end of the consolidation and now it's looking positive, or do you believe there's still some more room for consolidation for this stock?
Consolidation phase has been over, so if you look at the stock, witness some amount of resistance area into the intraday average on multiple counts, and then witnessing some amount of consolidation has been put in place over the last 6 months. It was a strong outperformer in the last previous farmer rally, so we believe that now the stock is ripe for a strong breakout above its intraday average. RSI is also inching upwards from its rounding bottom, so we believe the stock can move further higher near to 1280 to 1300 levels to test its 200-day average. So we remain constantly positive on the stock.
Okay, so positive view coming in on Dr. Reddy's Labs. Let's move on. Ansh, Mphasis, a stock that's doing well. It's also holding up the entire Nifty IT index. So tell us what the numbers look like, because the 3% up is what we're seeing today.
That's true. So numbers were actually better than the expectations. If we talk about revenue, then that was up by more than 4%, rising from that 3,561 crore directly to 3,710 crore sequentially. Also, if we talk about a growth in constant currency, then we are seeing 2.9% of growth sequentially. In EBIT terms also, we are seeing good jump of 4% to 567 crore, whereas profit also saw a good jump of more than 4%, actually 4.4% to 446 crore. Talking about margin, then that was steady at 15.3%. The company also said that this quarter they had highest quarter-on-quarter growth in 12 quarters, also highest TCV wins in 7 quarters, also highest ever quarterly and full yearly EPS. On the back of which we are seeing good positivity flowing in this stock. Also, if you see on chart, then that stock is trading with a gain of more than 3%, touching 1 month high level.
Okay, sitting pretty at a 1 month high is Mphasis. Under that, let's also listen in to the word coming in from the management at Mphasis, because after a healthy show in Q4, they say that the deal win momentum will sustain in FY26. It will be better for most verticals as well. They expect margins to be in the range of 14.7 to 15.7%. Let's go across and listen into what they have to say.
The fact that BFSI and healthcare both really are not in the direct line of fire with the tariff related headwinds. They're probably more a second order impact, but definitely makes it an interesting segment to play in, because the adoption of new tech stacks and AI infusion definitely is picking up pace, especially with banks. They're pretty forward leaning on adoption of new tech. I think insurers have had an opportunity to leapfrog, given that they were still in the digital chassis build out phase, and Gen AI will give a boost to that as well.
I think right now we are comfortable with a range between 14.75 to 15.75. So we actually narrowed the range. The main reason for a range is, and Nitin kind of talked about it, there are multiple elements that we are looking at. There are large deals in the pipeline which may require investments that we need to make upfront. There are big bets we are making on AI which will require investments. We are creating a large deal teams which will require investments.
Okay, that's the word coming in from the management at Mphasis. Outlook looking good for them. And Vikas, coming to you, Marico is something that you've picked out for us on the charts. It's done pretty well in the last 1 year, roughly anywhere between a 35 and 40% uptick coming in. This year so far also YTD it's up 11%. Tell us what's your outlook on the charts, and do you believe that this shade of green could continue for Marico? Vikas, Marico is the chart that you picked out for us. What's your outlook? Okay, I believe we have Vikas on the snappy line. We'll just reconnect him and be right back. But on that note, viewers, time to listen to a very short break, and we'll keep it going with all the buzzers on the other side. So you stay tuned.
If you like this video, then like, share and subscribe to ET Now.